Hi guys, and welcome back. Now this is now going to be the second half of my learning outcomes of what I learned in finance throughout the year. So I'm going to be explaining a bit more about the ratio analysis and the balance sheet, and then I'll be doing more about the ratio analysis of gross and net profits. So yeah, that'll be on the second document, but for now I want to basically go to the balance sheet and the ratio analysis. So, liquidity ratios is current asset test ratios in relation to liquidity and cash flow. etc. How quickly assets can be converted to cash. Current assets. Now, current assets and current liabilities are highly popular when it comes to finance. So what's current assets? It accesses the goods, owns and can be converted to cash and sales within 1 year. EX's banks, examples of cash, banks, stock, debtors and prepayments. And now here comes the current liabilities. Everything the company owns and must pay within 1 year. Examples are creditors, bank overdraft, VAT, PRSI, PAYE, USC and corporation tax. Current assets is the ratio of at least 2.1, means a company should own at least twice what it owns within 1 year in the short term. So example 1 is 200,000 and C.L is what is current liabilities, and then C.A is current assets. So current liability is 100,000. So 200,000 of current assets, and then current liability 100,000 is, the answer is 2.1. So it's, and here's the second example. Current assets is 350,000. The current liabilities is 110,000. And then the answer with this one is going to be 3.1, 18.1. So 0.1 is the current liabilities, while current assets relates to the first point. So that's how when you do this in a third level exam or level 6, when you do this in a test, you have to analyze and find the answer for the current liabilities and current assets. You just divide it over each other, and you should get an exact simple answer with a two-dotted answer. So that's how to do current liabilities and current assets. So now I'm going to move on. So more details, and it says current assets are bigger to own than current liabilities. The closing stock. All I need to turn this black so the writing's going to be a lot clearer. Right, now, here we go. This ratio excludes the closing stock figure, as it can take much longer to convert stock into cash, i.e., for example, to make a product to sell. Asset test ratio is a quick test, and the current ratio is a working capital ratio. It's very hard, but I need to know those words when it comes to the exam, because the exam requires 60 marks. So I'm going to be doing a lot of revision after my break in February, and then in April, between April and May, is when the exam will come. And then when the exam starts, I have to be prepared on what I learn, my learning outcomes that I learned throughout the year, like all these qualifiers here that I learned in finance. So it's going to be taking a lot of revision, which is why my assignments that I got today is going to be due after my February break, and then after that I'm going to be revising all the way up to the Easter break. Doing my revision in finance, prepare myself for the 60 marks of the finance exam. So now I'm going to be doing the questions examples. Question 1 is case here. This is actually to find the missing figures in the trading profit. So it's the simple working. So cost of sales is, to find that, is sales is minus gross profit, And here are the number of figures that are in an exercise sheet. Then define opening stock plus purchase total, then cost of sales, add the closing stock, and then define opening stock. The answer to that number figure is the minus purchases, and then that take away from 57,000, and then my answer will be 78,000. Then define the total answer. The opening stock plus the purchase, that answer then take away the closing stock. So 78,000 plus 57,000, that answer is then take away 75,000, and then I got 860,000, which is on the cost of sales table. Gross profit is just 120,000. I just take that away, and then my net profit is 40,000. I'll explain this. This is similar to the fourth question. I'll skip that. Yeah, and there are all the answers for the second question to find all these missing figures. This is where it comes more into current assets and current liabilities. Now numbers, and then here comes the balance sheet as well. So balance sheet, the fixed assets is 360,000. The current assets include debtors is 160,000. The current liabilities is 26,000. The trade creditors is plus 134,000, and that answer is 494,000. Here comes the working capital assets, working capital ratio, and then here finance buckets. The debtors is 10%, which is 25,000. The ordinary shares is 429,000, and the profit and loss balance is 40,000, and that is comes to the total answer of 494,000, which is here. I add all those three together, and I get 494,000, which is actually comes here to here as well. So the both set of answers are quite the same as when I analysed those figures in the very end to the end of the balance sheet. So very good. Most likely I've been doing very well so far. What I learned in finance. So there, the asset tests. So the current assets take away closing stock is equals current liabilities. So 160,000 take away 75,000, and my answer for the current liabilities is 85,000. And there's the breakdown of the current assets. 22,000, 75,000, 53 plus 53,000 is 160,000. And here are the names of those figures. The debtors is 22,000, closing stock is 75,000, and the banks is 53,000. I won't go over to the next step because they're quite similar. Just the number figures are different. So that's the end of this file. Now I'm going to move on to the next one, which is the ratio analysis explanation of gross and net profits. You see, the fourth example is the corporation tax is 12.5% of 33,882 and 80 cents. I explained from the last video about the gross and net margins and profits. So I'm going to move on. Yeah, I said all these before. They're quite the same explanations from the fourth file, Finance Trading Profit 4. Just need to turn these black. Okay, so yeah. Right, here is the more information details about ratios. So profitability ratios, all expressed as percentage. Okay, give me a second while I turn all the writing text black. Okay. Okay, now I can move on. So now I'm going to continue explaining the ratios. So profitability ratios important to management as a measure of annual performance. Of particular interest to shareholders seeking dividends or further investment opportunities. Also of interest to employees seeking pay increases on job security. And now this is where it comes to liquidity ratios. It used to examine cash flow and reflect the firm's ability to pay its day-to-day expenses. Here are the bullet points: the working capital ratio and the asset test ratio. The liquidity is the flow of liquid in business terms, we mean cash flow, and the money in and plus money out of the bank. The current ratio is the current assets, current liabilities, and I explained all this before. So yeah, I think that's all. That's all what I learned so far. That's all the explanations that most people maybe needed to know when you want to learn finance. So that's the end. So that's the end of this video and what I learned so far. So thank you all for listening and thank you all for watching. It's been very good to show you all for what I learned so far in finance. It's been not an easy module, but I'm getting around to it. I'm doing very well so far, and I'm going to pass it. I'm going to hopefully get the best grade in my results, and then graduate with my certificate in August. So, thank you all for watching, and hope you all have a nice day. Thank you all for watching, and see you all very soon. Adios.